they've demonetized the currency, or they've eliminated the currency as a store of value for savers. I think that the economy of the world, like I would say Western civilization, but maybe I actually think the entire global economy peaked in January of 2020. I think if I think about January 1st, like New Year's of 2020, just before, we got hit with COVID, and I think about how the world worked, the concert business was raging and travel was raging, and the airlines were working smoothly, and the hotels were on fire, and small businesses were on fire, and there's entrepreneurialism everywhere, and an explosion of yoga studios and specialty everything. I think we kind of hit the peak of this entire business cycle then. Everybody was able to go about their business unfettered. We had a little bit of monetary inflation in the system, and so it wasn't like things were perfect. They weren't perfect, but compared to what came in the next 2 years, which is just unprecedented government intervention in every aspect of our lives, telling you who could come to dinner, how far away you had to stand from your kids, how many masks you need to wear, how many vaccines you need, whether or not you can go to the gym, whether you could go to the office. So many things happened that intervened with the free market, and they were all restraints of trade, creating massive inefficiency and all this. I think policy intervention unprecedented across every dimension of life. You got a war on carbon, a war on corporations, a war on foreigners, a war on trade, a war on COVID. I could go on and on and on, but wars are unprecedented policy interventions by governments in our lives. So if I go back to January, and I just picked like January 1st, 2020, while we were still innocent and before COVID hit, and then the war on currency hit, et cetera. And then you go forward to today, and I look at what happened. Well, the money supply, the M2 money supply of the US dollar expanded by my chart, 41%. We expanded the money supply about 41%. Now, how did all the assets behave? Well, gold is up 20% since that day. So gold captured half the money supply expansion. It didn't track the money supply. What did track the money supply? US single family homes up 45, 46%. We all know the story of home prices exploding. So single family homes slightly outpaced that money supply. And of course, granted, the money supply is like an imperfect government metric. They give you their best estimate with a 1 or 2 month delay. So, I mean, it might be the single family homes are about at the money supply. NASDAQ, the index, 19% from that date. Up 20%, but the money supply is up 40%. The S&P index up 13% from that date. Bitcoin up 185% from that date. So, and if you picked a broad commodity index, I think the commodity index up double the US home. So you would have beat the money supply slightly with desirable real estate. You would have beat it with commodities. You beat it with Bitcoin, which is like a basically synthetic digital commodity, but it's scarcity. You wouldn't beat it with gold. You wouldn't beat it with NASDAQ stocks. You wouldn't beat it with the S&P index. And so, you could roll the clock forward. You can roll it to August 10th, 2020. That's the date that my company bought $250 million worth of Bitcoin. And so people knew who I was on that date, and we made a macroeconomic commitment. Now, we've been studying it for 90 days previous, and so we made a commitment based upon the circumstances in the second quarter. But if you look at the macro numbers from August 10th, if we had bet 250 million on Bitcoin, or sorry, 250 million on gold, it would have been down 10%. Gold is down 10% since August 10th, 2010. So gold got a boost in the first part of the crisis, but then it kind of flagged. NASDAQ is like flat, minus 1%, 0%, went nowhere for the entire 18 months. The S&P slightly up 11%. Single family homes up 26%. The money supply up about 20%, maybe 25%, depending on how you count it. So again, single family homes tracking the money supply. Bitcoin, even as it's been thrashed right and left, up 86%. So if your time horizon is less than a year, you're a trader. Even if it's less than 2 years, you're sort of a trader. And if you're a trader, you can be right or wrong about anything in that 18-month time frame. You could have said you're an idiot not to buy Amazon stock when it was whatever, and you're an idiot not to have sold it after it doubled, and you're an idiot not to have, right? You can just drive yourself crazy if you're a trader. And so that's why I don't join with the traders. I just don't know it. I think you need to have proprietary expertise of some sort. But what I can say is if you're an investor, you kind of got to have a 4-year time horizon or longer. And if you're a saver, you're a 10-year time horizon or longer. So I think the macroeconomic environment was strap in for a wild ride. And that was like a given as of March 15th, 2020. Around March 15th, Sven, I think the 30-year yield was maybe 1% for the US bond. The swap rates were 72 basis points. So the 30-year swap was 72 basis points. And I remember it vividly because I entered into a trade for 72 basis points because I thought, why not? Now, if you look at the way that that's moved, it's just been a roller coaster ride. But you would know that, if a reasonable price for 30-year money was 4% or 3.5%, and if the swap rates were 72 basis points, there's going to be hell to pay, as we come out of that, in essence, free money environment. And the only question is what's going to happen. And of course, if you look at the swap rates right now, the 30-year swap is 298, but it was 311 like yesterday, or 315. It's flopping all over the place. The 2-year swap rate is 358 basis points. So we've got basically interest rates have been jacked on the 2 years of the 1 years from 0 to 360 basis points. The yield curve is flat. It's worse than flat. It's inverted. There's yield curve control, right? In Japan, where they're pegged at 25 basis points. And if we, look at these currencies, right? And what's going on with them and what's going on with the bonds, well, look, just the currencies year to date, my charts say the dollar strengthened against the yen 17%, against the pound 10%, against the euro 7%, against the franc 5%. These are massive moves. Year to date, the 2-year, has gone from 76 basis points to 310. So I think we got on a wild roller coaster from a macroeconomic point of view, starting in March. 15 days to stop the spread. You remember the 15 days stop the spread? 2 years have gone by, 2.5 years have gone by. My office is like 10% occupied. There's no 15 days, not 15 months. Call it 4 years after that happened, we will get to a new normal and we will never go back to the old normal. So macroeconomically, if you're looking for any good idea with a time horizon of less than 2 or 3 years, even 4 years, you're just a trader. And right. I think, there's something wrong. There's a moral hazard to making 99% of the population traders. right? The real moral hazard of the government monetary policy is by pegging the interest rates to zero, and by yield curve control, they've demonetized the currency, or they've eliminated the currency as a store of value for savers. And that means they've forced retirees, it doesn't matter retirees, it doesn't matter whether you're 20, 30, 40, 50, 60, or 70. They were forced non-financial investment professionals to take risk, forced them to take risk. And then the cruel joke of it all is, in addition to destroying your savings account and destroying sovereign debt as a store of value, they also have put equities on a roller coaster. So that, if we look at the roller coaster of the S&P index or the NASDAQ index, if I can't buy the bonds, I got to buy the index. And they put the indexes on a roller coaster, and they put them on the roller coaster by, I don't know if your memory's good. You might remember, a certain head of a central bank saying, we're not even thinking about raising interest rates until the year 2024. I mean, the irony is you're sitting there watching interest rates at zero, and they're saying, well, it's 4 years. Okay, well, 2 years later, and we're getting a 75 basis point